All right. Good morning, traders. You should see my screen. You should hear my voice. You should be able to chat with me and chat with each other now. Whoops. Sorry. Okay. Give it just a second here as everyone's getting there. Audio and visual turned on. Good morning, Tony Z. Good morning, Mike. Morning, Victor. Morning, Peter T. All right. Officially, good morning. Welcome, everyone, to the Options Income Launchpad Monday Market Kickoff. I'm Scott. I will be your host. As always, what we do is for education, illustrative purposes only, nothing intended as a recommendation to buy or sell any security or financial product. We're not advisors, we're brokers, so we don't give anything that should be considered personalized investment advice. Any decisions you make should be done so at your own risk. Yada, yada, yada. Good morning, Craig. Good morning, Bob C. Excuse me, I've got something in my throat this morning. Good morning, Mario. Mario, your name looks somewhat newer to me. Newish. Welcome. Glad to have you. And hope you feel comfortable asking questions, giving comments, but welcome, welcome. Good morning, Greg P. Just retired on the 4th. Well, that's a hell of a celebration. Congratulations, sir. And hopefully you will augment that retirement with your trading. Good morning, Vladimir. All right, I love it. Thank you, guys. That was a great energy for this morning. Let's just dive in. We know what we're doing here. We know what we're doing. Quick check-in. Let me get some charts up here. Let's pop into the SPY. Yeah, that's fine. Good start. 0.5%. 0.5%. Let's pop into the four broad markets. We'll go to the Dow next. 0.25% for the Dow. The Russell, another 0.5% there. Interestingly, you might look at the Russell and be like, it feels a little like it's, more sideways recently. And it has a little bit of that quality here. But we continue to see the small caps as the leading component of the market right now. That's worth noting. Let's go see how technology's doing. Pull up the Qs. Hope everyone had a great 4th of July weekend. 1.25. Now, the Qs had been the most struggle. In fact, when we looked at the 22-day for our major market analysis, the Qs were by far the weakest over the last month. So yeah, we need to see a little recovery here. We need to see these guys break out of this, consolidation. Okay. Let's take a look at one more market component. Now, here's what's interesting. The S&P is up 0.5%. By default inherently, what would we expect the VIX to be doing when we see the market up a 0.5%? We'd expect it to be down. Yeah, right? Exactly. I would normally think market's up 0.5%, VIX is down here. Uh, Testing these lows, but it's not. We're actually seeing a little bit of a VIX turn, which would, it's not, we're not working off of that low for high low correlation. We're working off of, let me get a straighter line. We're working off of this one. I'm going to go from the bodies and I'll include the shadow. And you'll notice either way, we're at a same low. It's not a higher low, it's the same low, but it is turning as of right now. You can see the pinch is happening here. So is there a little concern that if we see this, what are we thinking to ourselves? Now again, you do have this kind of pattern going on here. So even still, if I saw something like that, that's another lower high, and my expectation would be that's the one it takes to break down to the low teens. We haven't seen a VIX in the low teens for a while. That would really help boost our market posture. We're not gonna get a 6 or a 7 market posture if we don't get a VIX back down flirting in the low teens. Let me 13, 14, well, not maybe not 13, 14, 15 at least. So I guess mid to low. Let me go back 2 years real fast. Whoops. Well, there's 1 year. There's 13. Yeah, 13. You can see back in this area here, we're close, but we haven't got there yet. And the fact that we're turning up makes me think the market could be on the verge of a pause. Okay. Let's go. Let's go take a look at what's going on. I thought we'd get more of a consolidation. This one looked like it was done. I'm pretty sure everybody is out of this now. Am I right? Is anyone still holding on to some of that? If so, tell me what option contract you have. I'm very curious. Um, Apple, an interesting one. Archer Daniels is kind of flat. Now, we saw a little sell-off across some of the chip makers, memory, things like that. What does that mean? It means that if we see them stabilize now, this may be the next opportunity. Here's the deal. I don't want anyone to feel like, man, these are the movers. I need to get in these. That's something that's moving from 640 to 580 to 740 to 600. It's volatile, first of all. The second thing I'm going to point out, it's pretty expensive, 600 bucks. There's worse, for sure. There's worse, but I mean, most of these things are pretty expensive. And then to compound, at or near the highs for implied volatility. Um, these options are so much more expensive than they were back here when we were considering a trade. So when you put all of that together and then the unseen from this chart. So if you've been thinking to yourself, man, there's been difficulties despite the fact that I'm overall feeling bullish and this market has advanced. The last difficulty that you really have to make sure that you're accounting for is in the options market itself. The the spreads, bid-ask spreads, have been are the worst I've seen, and I can't remember when. Um, the market makers are protecting themselves through that width at our expense, and so you have to be pretty careful when you add all of those things together with what you trade and how you trade it. And that's okay. Yeah, let's talk about that. Let's just make sure that we're like, all right. Vladimir wants to skip ahead to C. Okay, C looks fine. Um, Oh, it never tested worse than when we got in. It held the support. I know there was a couple of pickoffs, and if you set tight stops, you control risk, but you risk picking off of trades that still hold and bounce. Let's see how it does pre-earnings. We have a fixed timeline on this thing. We have until 7/13, 1 week. 1 week. And in that week, really, I actually see 5 days because if I know I only have one more day in the trade and I've got something pretty good on Friday, I'd book a good chunk of it. So let's just kind of see what this looks like. Six, so 7, 8, 9, 10 here. So here. So yeah, hopefully if this thing can get up 150, 152-ish, and then you get 13 and then that's it. So I don't know. This could be an interesting one. And also keep in mind, this means it's not just Citi. We're going to see earnings there for Bank of America. Oh, I changed the stock. You'll notice I changed the stock, but look at the earnings window, still there. If I go to Goldman, boom, Goldman is there. If I go to Morgan, boom, Morgan is there. Um, okay, so Morgan's getting a nice piece. Now, same kind of a thing. This one has a little more time. I talked about this one on Thursday. I said I took a half a piece of this one, and we'll look at the rest of it today. But financials look good. If you're in financials, they're showing momentum. There's, I think, time for entries even still, but you have to think to yourself, what am I expecting for how long? This would be a continuation trade. This would probably be one where I would look at now a hike in Ashy. I'm going to have a stop. I'm going to trail the stop. I'm going to ride it during the until it gets to earnings. Like you can see back here, same kind of thing. A pre-earnings pop is what we're kind of looking for over here. Can we get that? Okay, we'll see. Um, this is definitely the one I like the best. Earnings or volatility still overall pretty reasonable. If anything, I would expect that implied volatility to go up as it gets closer to earnings. We'll probably come back to this and see about building a continuation trade on this one. Give me your thoughts. Are you in it or not in this? Are you in financials? Are you bullish on financials? Are you looking for something to be bullish on in financials? Let's get some dialogue going here. I feel like I'm monologuing this morning. Want to be an MS, John? Well, John says, okay, okay, I like it. We'll come back to this one. Let's just pop around a little bit more. Plenty of time. Caterpillar. Charles likes it. Caterpillar's setting up. What's the problem? The problem is volatility is at its high.
Didn't like that.
The problem is that for months we have really been quite
Yeah,
uh,
I did.
disenchanted. I don't know, is that the right word? With the options. I'm looking at the Julys. That's the standard with 11 days left. I would expect to see um I would expect to see several hundreds at least, and then thousands in some of the but no, we've got one place. There's just somebody I think told me to go out even to September's. You do get more open interest, but look at the price of these. These are the these are the 12. So these are out of the money by 100 points and for a month and a half. It's expensive. And you might think, well, can I do a spread trade? Well, the problem with the spread trade is you're trying to these spread trades would be 20 points wide. You can see there's $4 of gap between bid and ask. Makes it very difficult. Let's keep looking. Does look bullish. I mean, I grant you that. It does look bullish. Cisco, CSX still going, still moving up again today. I think it looks good. I think it's got momentum still in front of it. If you're not sure where you might think about a trailing type stop, you can always move your Heikin-Ashi candles in and just sort of find a level that you just are saying, hey, I'm not going to use today's low. I'll use this candle low for today, and then I'll use today's low for tomorrow. And that has you moving it up 50 and a half or so. Looks like a pretty good place to me for taking a chunk. And then maybe I would leave one more piece on, a small piece on, to see if it runs any further. Who's in this one? Give me your thoughts. Have you taken profits yet? Have you moved your stop? If so, where? Um, got in Morgan on 7-1. Tom C, I love it. Still in MS on paper trades. I love it. It's building the right uh, processes to catch those and get in them. I love it. All right. No takers for CSX. Let's keep going. Delta. Dell is kind of sideways. Mm, so far, Morgan is standing out. FPS, Forgent Power Solutions. I don't know. Could be trying to stabilize. GE, a bit overextended. In on C until 821. Okay. Got something got the August makes sense. Gold is down, General Motors down. Google waiting to see if this thing will trigger. Goldman looks pretty good as Morgan, like those two move pretty well together. This is a much more expensive stock. This has a little bit higher vol, so it's a little harder to trade this one. So if you like it, okay, but there's a little bit more of a challenge logistically with those trades. A little bit lower open interest, so not as good on the spreads. Tom C says got the CSX. Oh, nice, love it, beautiful. HPQ. So this is one I would get a lot, where people are like, "This looks great, right, Scott?" They're like, it clearly found a support level. The seller stopped. The buyers are coming in today. The stochastics is turning. The problem for me is it's has been in this long enough. You can clearly see I would put my line that I would be like, well, I'm not. I still see the consolidation. It's a pretty easy consolidation to break. If this thing can put together 3 or 4 days of buying and get up here to like 24, um, and then pull back for a higher low, that's it. I don't feel like that's too heavy of a burden. But I'm not looking, I would not look at this as like, hey, look at this thing, it's catching. I'd be thinking, yeah, it also looked like that right here. It also looked like that right here. Um, that's twice. This one really was just for a little half a breath. I would say not really that one, but you get the gist. Be patient, and then this will happen. I would love for this to happen. This thing wants to burst into some momentum. When I see this pattern come, this is the type of thing that would absolutely become an alert right out of that pattern like that. IBKR. Uh, we were tracking this one. It had such a big entry that you're like, what do you do with that? And then you can see it's settled in, but still just barely sticking with the current trajectory of this anticipated momentum move. Intel. Okay. This is still at 100% and at its high, but it is 126. It's going to be a little easier. Uh, I'm looking now. This one has much better spreads. They're still pretty expensive, but now with something like this, if I did a trade on Intel, well, let's have a little dialogue. So, okay, Peter, we'll go look at Palantir. Let's say I'm thinking about Palantir or Intel, and I look at that implied volatility, and I think, ooh, these options seem expensive. Where might we consider moving this strategy or the way that we implement this trade as a result? We've got a nice uptrend on our stock, good momentum, higher high, higher low. Thinking about catching another one of those moves where I mean it went from 100 to 140. That was a 40% move. After its earnings, it broke out to 80 and then went from 80 to 120. That was a 50% move. So could it go from 120 to 160? Yeah, that's only a 30% move. So that would be quite the move right there. Problem is that it's built in. People have built a lot of expectations in on this thing. What can I think? Well, we can do spread trade, right? We can build a bull call spread where we're not just overpaying for the options. Um, but at the same time, if you have something that could move to 160, you might think, even if I go out of the money to 150, if it gets to 160, that then has $10 of intrinsic value. If I paid $2 for it, I got a 500% return on that option. So it's an interesting market right now. I would absolutely put this one as setting up, not as advanced as Morgan, but this is high on my list. Not just because of its setup. Right now, one of the things I'm really paying attention to is the logistics of the trade. I see a lot of things that I would just be like, I just wouldn't trade that. I don't like I don't like the combination of the expensive options, the wide spreads, and I just think, no, I'm not going to try to put that trade on. I'm focusing on things, right, like the city where it's so much more tradable. So when I see something like Intel, I'm thinking to myself, yes, this is definitely where I'm looking for a trade to develop. But I see something on Morgan Stanley. You guys kind of picking up what I'm putting down on the theme of where I would rather be trading right now. Tell me you feel that, right? Where you're tired of these outrageously priced options, implied volatilities through the roof, higher than you've seen, wide spreads. God, ugh, it's tiresome. Everybody else is quiet. They're all like, no, Scott, we're not having that issue. I know you are. Intel's definitely a strong candidate for this week, early this week. Probably not necessarily today. IWM, JCI, Sideways, KLAC. I mean, even this one already. When it split, it was closer to 200, and now it's 240, and it's coming down from 300. And the implied volatility is at 106%. Pre-split, we thought it was high at 77, but we're like, that's not bad comparatively, and it's already up. Those options are already priced this much relative to this. It's crazy. KNX sideways, Lion. I would trade this again. I net some positive on this one, but it chopped around a little bit. I'm 100%. I would be thinking to myself, let's, whoops, move this up. Peter says I'm taking too long to get PLTR. Let's pop down there. Okay, so it is engulfing. Uh, let's see. I'm coming off of its newest lowest low by kind of a big amount, right? Like it was really holding resistance around this 130-ish, 125, 127, something like that. And then when we broke that, you can see it dropped all the way to 106. It has V'd almost stuck under the 200, hasn't quite completed the V, right? Hasn't made a full V. I don't know. I don't love that it is um I don't love that it's almost there for a new trade. Um if you're looking for a swing trade, I feel like it's kind of that's all right. Sometimes if you were like, hey, let's take a peek, I'll pop around. I know I get a little bit obstinate on ordering things, but this one looks a bit overextended on the current run. However, for me, it has broken this consolidation clearly. So it broke that. It did it with a couple of volume days, which has put it up here. The next time it pulls back, I'm thinking to myself, I love trading Palantir. I know what Palantir can do when it trends. So my next trade on Palantir is existing out here, which is when that reversal pattern that we're waiting for in a couple of places completes itself. If you're in this one because you right, yeah, great. I would say watch out if it gets even a little bit more, 133 and a half ish. And we're at 131. So even if it gets a couple more points at that point, I'd be really worried about its ability to get much further before it, reestablishes some momentum, gives itself a little bit of a pause. Okay. It's so funny. Victor says the problem is it can break downward most of the time. It was one of my favorites. This we actually in 2024, that was our we had probably four or five trades. And then in 2025 we had another three. That's probably one of our most alerted. Not for a while, but back then, same thing. I mean, we crushed some trades with Palantir back in 2024 and early 2025. And then it just sort of, got choppy, and I would love to see it. Like I said, we'll see what happens. I'll keep an eye on it for sure. Netflix, Head and Shoulders put. Okay, let's go. I like Netflix is struggling. Very big struggle. I don't even know if I would say necessarily Head and Shoulders, because I would just say just downtrend. I mean, it's uh, yeah, it just keeps dropping and making lower low consolidation, lower low, and it chopped, but this was all one to me consolidation, and now it looks like this thing could be ready to roll over. Yeah, if I were going to do a put trade, that would be what it would look like. 100%. John. The options are pretty expensive for that put. It's already priced in to some extent, but I would expect there to be good volume and open interest. I'm looking at the Julys and they look pretty good. The spreads look pretty tight. August, same thing. Yeah. That's well identified. I would definitely be open to something like that. I don't think yet. I think it's still sort of like it's close. It's knocking. Yeah. Okay. Where was I? Lion. Let's go LRCX. Setting up. 360. And you're thinking this is one of the more affordables. And the volatility hasn't hit 100 yet over here. It's real close though. Um, but that's a mover. That's Let me go look at these options. July's not phenomenal. I mean, I'm shocked by how little. And maybe it is the open interest and the width of the spreads that's spooking a lot of people away from trading these. Now I'm looking at the August. God, they're expensive. Yeah, I don't even know if I would trade these logistically. Lunar still down. MetLife up. Meta maybe. Monster, Marvel. Let's play with this for a continuation trade with a fixed amount of time. Um, I'm going to give me just 1 second. I'm going to get a form ready here just to keep us organized. Just to keep us organized. What is today's date? 07/6/26. All right. We're going to use this. Now, I lessened this a little bit. I'm actually going to uh that that's what I nope, I don't quite get that. There we go. Boom. Okay, 238. Working off of more of one of these. I think I widened this a little bit to give it we don't have that much time. So let's just sort of map this trade a little bit. Morgan Stanley, and we are bullish on Morgan Stanley. And basically and it's pulled back a little bit. This trade is valid. Well, we'll see. I would say the start of today, so 216.50. And today's high range for now, we'll go with that 220.50. Stop range. I'm gonna go into the Heikin-Ashi. This is more of a continuation trade. I'm gonna use yesterday's low, 211.55. We'll say 211.50. Keeping it round. Whoops. 211.50 for now. Plus an extra. We'll go 207.50, an extra 2%. Primary target. What is that? 238. Let's put this on here. 238.38. We'll say 238.50. 238.50. Uh 230.50. Keeping the theme alive. Time and trade. Now, this is on 7:15 before market. So buy out by 7:14 end of day due to earnings. Out 7:14 earnings. We'll say out by, does that all fit? Due to earnings. Okay. Out by. And that's really not very long. A week and a day, a week and 2 days. What is our reward to risk ratio? So so if I'm going from 219.50 to 238.50, it's about 18 and a half to make. So if I'm 18.5 divided by about 8.5, 2.17. Now, you might be thinking to yourself, we we a lot of times have better reward to risk than that. This is a little different trade. Mid-ish, mid. We'll say mid. What do I mean? It's a different trade. Well, it's a continuation trade. This is already we had a turn and now we have this candle. This is already started going the other way. So we didn't catch the bounce. If you want 3 to 1, you have to catch the bounce. When you already have confirmation the move is in place, you're not going to get as good of a reward to risk ratio. That's just the natural distribution of the sliding scale of expectations for reward to risk relative to expectations of probability of success. People are like, "Oh, I'm going to be right 70% of the time and get 5 to 1." You're not. I mean, or if you are, come to the head of the class, but that's very difficult. You don't see that much. Uh, so, what do we have here? This is a trade that's already moving. So, my probability of success, I would say, moves higher. I'm thinking I should be able to be right on a trade like this 50 to 60% of the time, not 40 to 50% of the time. And that's where the expectancy for something 50 to 60 with 2 to 1 is very similar to 40 to 50 with 3 to 1. Does this make sense? I feel like I'm rambling. I feel like you guys are quiet. It's a Monday. I get it. You were out shooting fireworks. Your ears are still ringing. Um, did I look at Ross stores? The spreads are so. Oh, I'm gonna go do both of those things. Let's leave this for now. We'll come back and look at the options. I love it. You guys, thank you. Appreciate that. Let's go take a peek. I feel like I've been watching Ross. No, ROST. Why don't I see it on my list? Did we not have Ross stores? What did we have? I bounced it. All right, let me go back, put it on. Mike's saying I kicked it off the island. Oh yeah, I don't love it breaking down like that. That's for sure. Okay, now I feel like I feel like Tom C is being sarcastic because I'm looking at the July spreads and they look not good at all. Very, very wide. August also very, very. How was? Oh, he's saying not good. Yeah, no, they're entirely horrible. Okay, take a look at the Rocket Lab. Rocket Lab. I don't know. Are you thinking Rocket Lab for a put? Are you thinking? So there's two ways I would think about Rocket Lab. If it had a minor pullback from here, I might think to myself, it's trying to reverse now and get back into a competitive fashion. However, if I am owning shares, I am hopeful, yeah, that happens. Speculatively, um, the buyers didn't do much, and we know that the sellers have really been putting the pressure, putting the screws to this thing. As right, maybe they're you can see there's this old support, new resistance line right around 75 or so. Oops, kind of rose it up a little bit. Could it be heading down there for a test? maybe. I would certainly be a little bit leery of that. Next stop below that one is the channel has its low around 65, but you can see what it's tested down there. Speaking of SpaceX, it's kind of sitting around now. It's kind of sitting around now. Since we're around, we'll pop through RTX, STM maybe setting up for something. STX. Ooh, Taiwan, maybe. TTMI a little too far down. BSH, WDC. I mean, look at this. This is the most affordable of the memory. It's 600 bucks. Volatility is at 114%. Uh, Spreads are hard to trade them. Difficult to watch them. It's difficult to trade those for sure. Okay. Any others that I missed? Riot. You can see why I go in alphabetical order because otherwise, when I start jumping around, it gets scatterbrained. You're like, what's he doing? Spreads are really bad, but the stock is affordable on ATK or let's go look. We'll go look. Anyone else have one? Throw it at me, and then we'll go back into Morgan. Oh, your son works there. ATK at core. Um, it does. I would agree with your assessment. It's oversold. It's accelerated a little bit in its consolidation. So it was consolidating like this at first, and now it's accelerating down. But those accelerating consolidations oftentimes are the ones that get a little easier to break out of. You can see back here, it was kind of this way, then this way, then it accelerated. It broke out, pulled back, bam, first, that's it right there. That's what we look for. And then it gave you a trade, and then it pulled back, and then it gave you a trade, and then it kind of went into a little bit of a quagmire. So, watching it right now, this is what I would be thinking to myself is when it pops out, comes back down, can I get one? Then can I get another one? One, two, boom, boom. Um, anyway, let me know your thoughts. Whenever I look for this little consolidation breakout test pattern, I like to look back and see if I see it on that chart. And you can sometimes see them so clearly. You're just like, oh God, look at that. That's exactly what we're looking for to happen again. Just it did it. Now it's cycling through it again. Right. And this whole picture, if I were to squeeze this down, remember we're on a 6 month chart. Uh, 6 month chart. What am I on here? 3 year weekly. Yeah, there you go. That's fine. You can see where it just is kind of cycling through. Okay. Back to let's finish here because this is one that I think is viable. What would I trade on this? Remember what we know. I know I'm exiting by July 14th. So can I trade July 17th? Yes. Yes, I certainly can because there's no way I'll be in them. So I would be looking at these 11 days. That's all I need. I only need them for this week. Um, 230s. Oof, they are going to run out of time on me though. Uh, Man, it's crazy. Even look at these. If you look at the spreads, I want you to notice something. When you're here at the round numbers, your spreads are much better than even just the next one down, 217.50. You went from a 70-cent spread to $1.70, twice as much. And then here you can see 65 cents. And then here, $2.15. Here it's 50 cents. Here it's $2. And so we know we're going to go with um I actually, in order to salvage, I might actually still go out. I might go further out of the money, but further out in time. Let's actually play with this. We have 7 minutes. Okay, so we have 238.50 here and 211.50 here. And I'm gonna look at two things. I'm gonna go here, 225, and I'm gonna go uh here. Okay, so what have I done? I've got two different sets. Now, remember, we know we're going to be in this up until there, potentially. Up until there. So on this one, I'm looking at 821 at 240. I think that's probably the stronger one. I think you went the right way. You can see it's very close to 2 to 1. But when I go here, yes, I thought so. Nice call, John Welsh. You can see this one was a little under 2 to 1. Not quite there, but close. This was like a 1.9, 1.95. And this one here is a little over. And I can control the risk a little better. 250 risk, 560 gain. So here I'm getting about maybe 2 to 1. Um, yeah. You pay a little bit more and you're a little bit further out of the money, but it actually protects the theta protects you better. You get too close to the edge, right? You get too close to the edge, too close to the sun, whatever you want to say about it. It gets a little too hot um, for the Julys. So yeah, I like this. I'm maintaining. I start with a 2 to 1. I maintain it, which is very difficult to do in a high implied volatility options environment. Very difficult to do. And to maintain something where you feel reasonably comfortable about the spreads. Give me your thoughts. This one's likely to come out in alert fashion today. I'm definitely keeping an eye on Intel. Uh, any questions on the process that gets us to this? We've had a lot of feedback of wanting to see the trades. So at this point, you would now position size, but you've got to realize at 385 a contract, you are potentially risking a chunk of that, 250. So if you're you might end up doing only one contract, or you might do two contracts only. Um, yeah. Okay. Well, you guys, quiet. Go get another cup of coffee, everybody. Go get another cup of coffee. Three contracts. There you go. It's things look pretty good condition wise. Our market posture. If you weren't there yesterday, our market posture is slightly improved for both me and the Oracle. 375 from a 3.5, 4.25. So you can see we're pretty nestled in. We're averaging around a 3.85, just under four. This is averaging 4.6. So a solid bullish market. It's not astounding. We would certainly like to see some things improve, but overall, we are looking for bullish trades more than anything. So okay. Well, I hope everyone is planning on watching. Has everyone seen the controversy with the World Cup and like Donald Trump's like calling the FIFA guy and he's like, "What can you do about this red card?" And all of a sudden everyone's like, "Really?" And it's a hard one because it was an outrageously unjust red card. But it's the optics of this are not good. The world has gone from we love America to like America is cheating at the World Cup. Make FIFA great again. However, I can't help but just want to root for the team. So go America. That game is this afternoon. I hope everyone's planning to watch it so we can all discuss it tomorrow morning. It's good to see everybody. Thanks you all. Have a great yeah, I love it. There's the enthusiasm. Have a great rest of your day. I'll see you guys tomorrow morning. As always, happy trading.